Best guest time. Remember, read all the best guesses on Malia's commentary at CassoneExchange.com. I'm on Twitter at Cheryl Cassoni, at Kim Guilfoyle.
Yeah, at Kim Guilfoyle.
She's also on Twitter. All right, Tyler, what do you have?
Well, my best guess is as we get forward through the summer, there's going to be a lot of issues and questions about QE2. Specifically, right now, people think this market will continue to run. The Fed is always going to be there. Bad news is good news. But I think as we start getting closer, there's going to be some questions about what happens now. Can the economy still stand on its own 2 feet? And we're going to get volatile and probably pull back from where we are today. So I think investors need to worry about that.
But you real quick, you like tech, I know. You like financials.
We like financials as well. So there's still some opportunity.
So there's opportunities. Got to be kind of careful.
Always
go to Tyler on the rally that we've had. Do you think that the rally for the month of February can continue?
I certainly think it can continue. Today we had some disappointing retail sales numbers, but overall things have been positive. What we've seen over the past several weeks is even bad news is treated as good news. And what I mean by that is we've got some bad economic news, and investors say, well, the Fed is going to step in with more QE. So I think as we see these pullbacks, we'll see investors jump in. What we're also seeing is this pull back out of bonds and some fear of what bond prices will continue to do. Well, that money needs a home, and I think that's going to be one of the other factors that's really going to push this market up in February.
I have to ask you, we've been monitoring the comments from Duncan Niederauer from the New York Stock Exchange, Euronext Deutsche Börse press conference. I do want to get your thoughts real quick on what we're seeing with this deal.
Well, look at what's happened to the New York Stock Exchange over the last 5 and 10 years. You've lost 80% of the employees, mostly due because of the lack of volume going to the computer system. So the age of the future is derivatives. It's the futures trading. So I think if you can cut $400 million, which the combined company is going to be doing, have a much more global footprint in this is going to be a win-win for both. So I think looking back a year, 2 years from now.
The other issue here is for the actual shareholders of NYSE Euronext. Is it a good deal for them? It's 0.47 shares.
Well,
I
think the market is adjusting that, and it's reflected in today's price. I believe the stock, I don't have a quote, but I believe it was getting hammered a little bit. So I think, getting to your point, the issue is the investors. How's this helping us? I think this is great for the company and the shareholders as a whole. But from what I hear, Deutsche Börse, people that trade really thinly traded stocks, they've got excuse the language, but screwed a little bit on the pricing. And what about this whole concept too big to fail? Didn't we just have that, happening?
Yeah, don't worry about language. Charlie does take
one of the biggest derivative traders now.
No, but you just made a good point. There's two investor issues here. How are our orders handled? And the NYSE is a big company, owns a lot of stock outstanding. The market is saying this isn't that great of a deal for them. Remember, what brought the stock up 2% yesterday? It went up 2%. Our report, I think it went off more than 2%. So a report that there's a potential hostile bid put the stock up 2%. I think it was down before that. So the market was saying that this was not a great deal.
Making a blockbuster announcement. They are hiring, and they are looking for 60,000 seasonal workers. Jeff Block is at a Chicago area Home Depot with the latest and what they need. Jeff.
You are more likely to find me in a Home Depot than pretty much anywhere if I'm not working. But today I'm combining my passions working in the Home Depot. A lot of people have passion for Home Depot, particularly in the spring, and that's why they're hiring these 60,000 seasonal workers. It frees up essentially, you say, well, what are these 60,000 people going to do? Essentially, it frees up the experts, and you're looking at one of the experts over there. These are guys that if you come in and say, hey, listen, I want some electric, wire. Do I need 12 gauge? Do I need 14 gauge? These are the people that are smart, and they know exactly what you need. And these people are freed up to walk the floor in the spring, and that's what these backup workers come in to do some of the dirty work while the experts are out on the floor. So it's Home Depot essentially, Cheryl, betting on a more vigorous recovery as we go forward.
But Jeff, isn't this the same amount of folks that they were looking for at this time last year? I mean, did they always kind of expect the spring rush because that's the home selling, home buying season?
Exactly. That's when they throw this in. But it's actually more people this year than they had than they went for last year. And they also say, in addition to the 60,000 seasonal workers, they will again add full-time as well as part-time workers overall for this year. And they also did last year. So basically a good sign, they think, at Home Depot.
I wonder if Tyler Vernon likes the stock.
Well, we're a little bit sideways on the stock and really the whole sector in general. I mean, we're concerned about really where this market is headed, especially the housing market. So to me, it seems like a ploy to take market share from a competitor rather than really things are getting a lot better. So, we're somewhat neutral on it.